Da-da-da. This is a brand new little intro jingle for everyone.
Ooh, I like it.
Just want everyone to get in the mood today. We're talking
Ooh.
about loan limits, how loan limits affect you as a home buyer, home seller. Let's get a little head nod going. I got my boys in the house, the full MLO team. Casey Carpenter, Christian Cam, thank you for coming in today. Give you a little applause, Super fun. I always just like to open up with the jingles, guys.
Hey, it makes it nice. Yeah, I like it.
I think I'm starting to annoy the corporate Zoom calls, though, when I'm chiming in with sound effects on our operations. Did you guys pick that up this morning on our...
I did. I think everybody everyone likes a good tune. They like to feel uplifted, get in the spirit.
Get in the spirit. Would you prefer something in spirit or more like I could also do lobby music if we want to get all quaint? This one feels a little bit more of Christian's ambiance over there at the Kemper's.
That's the thinking music. The thinking music, the pondering. Yes.
Yeah, you need a book and a robe.
Yes. What are FHA conforming loan limits for Multnomah County today, Addison? Please do. Boom. Boom, chicka boom.
super fun to play with. Sorry, everyone, if that annoys you. But yeah, welcome to today's episode of MLO. This is a live stream recording. Yours truly, Addie Net, and of course, my trusted partners here, Casey Carpenter and Christian Kemp.
Good afternoon, Facebook, and all listeners and everywhere out there.
Yeah, don't overwhelm us with energy, guys.
Oh my God.
So today we're talking about loan limits and how it affects home buyers and sellers. And we really have gotten some great feedback from people all around, whether it's directly from podcasts, Spotify, or Apple Podcasts, wherever you get your jams. The YouTube thing is slowly growing. We're getting some reach outs there. And some of the feedback we got is just kind of distilling it down to some digestible terms. So our goal always as a group here at MLO is to create a transparent environment for home buyers, sellers, and industry professionals to where we can learn and grow and prepare ourselves and self-educate into home ownership and investment. So that being said, we are really going to try to keep this digestible. So with loan limits, I think it's important for everyone to understand wherever you're at in the home buying process. There are different loan programs that have different limits and there's different scenarios. So just because we say something doesn't mean it's bulletproof, doesn't mean you go tell everyone that that's what it is and what you heard. The reason to have this group and this channel really is to prevent having that gossip going around. So you do want to check with your loan officer, or if you don't know what loan program you're on, you're going to want to know that. So diving into it, I know we've got CK is really going to hammer home the perspective of loan limits from a refinance perspective. And of course, we got our trusted veteran mortgage advisor, Casey Carpenter, who's going to dive in and talk a little bit about the vets and the VA loan limits, because there's a lot going on with that. So stay tuned on some of the 2020 changes, because they are true, but there's a lot of asterisks that I'm noticing people aren't talking about. And it pisses me off when any of our clients, but also veterans, don't get the full picture of what they're getting themselves into. And then I'll speak to the purchase perspective being my primary client list. So just to start off with just basic conventional loan, the loan limit was raised to 510 400. So loan limit is the amount that you can borrow, assuming that you are eligible and can get approved from an income and a debt perspective. So that really is the most amount of funds that you can borrow and remain as a conventional loan for a one unit property. So one of the things not a lot of people know too is there's actually increases for the property type. So when someone says the cap is 510 400, that is for a conventional loan amount borrowed on a single family residence. So if you were to actually go to a duplex, a 2-unit, the maximum loan then increases to 653,550. So rounding down, 653 for a duplex. Not a lot of people know that. And you definitely want to work with your loan officer because there are some minimum down payment requirements that extremely escalate when you start working into multifamilies. 3-unit rounding up 790, and then a 4-unit 982 rounding up. So that's, I think, is really important. If you're on an FHA loan, it's a little bit of a different dynamic. They account for a few different factors on determining the loan limit, and a lot of it's down to what county you're into. So locally in our county, and you definitely, wherever you are in the nation, like you could Google this stuff yourself, by the way, like max loan limit FHA, and look up your county, whether you're in Texas, Atlanta. We're here in Oregon and Southwest Washington. So our limits on FHA here, single family residence 491, 2-unit 688 rounding down, 3-unit 560 rounding up, and a 4-unit 944 rounding down. So we do have to preface all that. You need to qualify from a debt to income standpoint.
That's right.
The FHA, you definitely need to look at your county and how it's associated to where you're specifically looking or looking to live. So yeah, I'm feeling myself running out of breath, and I want to pass the torch over to Casey to talk a little bit about VAs and those loan limits. So take it away, Cart.
Yeah, thanks, Addy. Thanks for letting me kind of talk about that. And again, just want to preference, we're here to educate. We're trying to just give good education out there for people to absorb. Obviously, this stuff can change. You always want to check with your lender, especially just the different loan amounts and stuff like that. You always just want to do your due diligence and ask your loan officer, make sure you're getting the right information. From that, yes, VA had some big changes this year. 2020 had some big changes for the VA loan. The biggest change was the VA loan used to have upper loan limit, and the upper loan limit for us here in Oregon was $510,400. So what that meant was if a veteran was purchasing a property that, let's say, was $750,000, the upper loan limit is $510,400. So that veteran essentially would have to bring in a down payment of roughly about 25% of the difference. And that was kind of the case for a long time. Now, with the changes of this year for VA, what they've done is actually removed that upper loan limit. And this is a big deal for vets, because essentially then, as long as that veteran could qualify, they could buy the $750,000 home with no down payment. They would not be required to bring in a down payment. That's a big deal. So in that scenario that I was talking about, a veteran, let's just say they were buying that $750,000 home, they would essentially be bringing in about $60,000 for their down payment. And that's, again, the 25% difference from $750,000 to that upper loan limit that used to be there. So that would work out to about an 8% down payment on a jumbo loan. That still was a good deal and a good loan for a veteran. It really was. Most minimum down payments were 10%. Coming back to all this, they've eliminated that upper loan limit. So now that veteran, instead of putting that $60,000 down as a down payment, is not required to do so. So with that veteran now has additional money that they could use maybe to, if they wanted to buy a lower rate down, look at that, or maybe they save that money for their savings account, or maybe they're putting it into the home. But it is a big change this year. So VA loans 2020 have eliminated the upper loan limit to where now a veteran, as long as they could qualify, could put zero down on their purchase.
That's
big change, Addison.
That's a huge deal. We were all talking about this a few days ago, but I always like to explain what happens to the terms of the loan, typically speaking, when you do, for a veteran specifically, when you exceed that 510,400, because not a lot of people know this. Even if you do exceed it, even though there's no limit, there is a technical change in how investors are looking at those loans, meaning they are a VA jumbo loan, which has a totally different pricing model than the 510 400 or below. So, and I'm trying not to make it too complicated, but simply put, the rates right now, nationally speaking, just freaking Google it or look at USAA's mortgage rates. That's a very common company that veterans are associated with. You can see anywhere from, and I've been tracking this, 1 to 1.5% increase from a VA loan that is at 510, 400 or lower and above. So look at it, like literally type in like USAA mortgage rates today, and they're publicly issued, and you can see a huge discrepancy. So I've been advising a lot of our veterans to, if possible, if you want the lowest rate, try to keep your pre-approval budget or your price range on a home so that you're not borrowing more than that, so that you do have that much better interest rate. Anything to add to that, Kempers?
No, yeah, that's the only thing I've seen is the pricing discrepancy between the two. Much better pricing. We would be looking at some different jumbo things at that point in time, just to cross-reference for our veterans out there, just to see both sides, to see what's best. But yeah, definitely nice to know that you can put down 0 or no money down. That's the benefit. So there's somewhat basis points built into that pricing of what I would call mortgage insurance in a sense. You know what I'm saying?
Yeah, no, I hear you. I also think like one of the big shifts pre-pandemic that you're looking at is like jumbo rates not long ago, 3-4 months ago, were more aggressively priced, meaning they were better than conventional loans not long ago. And then we've experienced a change not only in our economical environment, but our health environment and where money was being shifted around.
Sure.
So you saw this huge dynamic shift of investors pricing out above conforming loan limits, jumbo loans, much worse. And my theory is, hey, the people that are most susceptible to be a hardship or a huge change in their career or their income is going to be the lower income bracket and the higher income bracket. And I think you can't argue the fact that, hey, we saw a lot of down payment assistance programs completely be suspended, and then we saw jumbo rates go skyrocketing. Yeah. So what, the bookend, like, income brackets are the ones that have dramatically changed during this entire thing. So that's my theory and explanation to people. Like, hey, it's a higher risk loan because they're most upset. That income bracket is susceptible to change, to be let go. So the investors are gonna price accordingly. Lastly, I'll add in too, prior to that, I think some of the bigger establishments, the big banks whom were providing some of the most aggressive jumbo pricing, were out there to do it a little bit as a marketing ploy to attract higher wealth bankers to their establishment to conveniently transfer over all of their investments, their savings. Additionally, high income earners, like banks make money on those payroll checks because that's consistent revenue streams that comes into their banks. So I feel like we're off the train of trying to attract high wealth people by having aggressive jumbo loans, just to backhand on that whole statement.
Yeah, definitely. Yeah. There's a lot of ways to curb that. We get flexible with some of our 80-10-10s, which would be 80% conventional, 10% second, on some of these purchases. So there's a lot of ways to get creative with a low conventional environment, and we need to take advantage of that for our clients.
Yeah, absolutely. And one last point on that too, as just any home buyer, and especially as a vet, you want to check too, with those VA loans, they used to allow you to be able to wrap on a purchase closing costs and funding fee and stuff like that in there. They had a little bit higher loan to value ratios. So it's something to check now, because it's not essential. Essentially now you need to look at that to make sure you have enough room. You can wrap in your closing costs, especially that funding fee. Because what I'm seeing is, and you want to check with your lender, but loan to value amounts are changing. It's no longer, as a VA used to be around 103% LTV. You could wrap in your closing costs and your funding fee, VA funding fee. Well, if you're at 100% LTV now, which means you could do 0 down,
Mhm.
If you have a funding fee, essentially, I mean, the way I'm reading this is you wouldn't be able to add that funding fee in because that's going to put you above the full loan amount. So it'd be something as a veteran buying that you want to talk with your loan officer you're working with to see, is that something, even though I'm doing a zero down, do I still need to have money to pay for my funding fee out of pocket because I can't finance that in if there's not enough room? So that's definitely something to consider.
Yeah, I think that's a good point. You're going to look at a lot of people who say, and I want to transition after this into a slightly different topic from a home buyer and seller standpoint on the loan limits. But to conclude the refinancing topic, say you bought something at like 560, for example, and you put 50 grand down, so you have the maximum amount borrowed, and then 6 months later, you've got interest rates that completely dropped, and you want to refinance. What a lot of people don't think through is the fact that when you refinance, you're gonna finance in all of the costs to your base loan amount, and your closing costs might now exceed with your current balance the loan limit. So, and often this happens quite a bit. People want to refinance and they just don't have enough equity to still keep their loan limits in. So it's something to think through. And one thing that we work around a lot, I know I would do this with Christian, is we time our refinances with certain escrow balances for people that might have just bought, because typically an escrow balance is going to be refunded back to you when you do refinance, and you finance in a brand new escrow and the closing costs. So there's a little bit of roundabout ways to move money and be smart and still take advantage of low rates. So I highly encourage, like, if you reach out to your lender, if there's anything we can do as a team, like, we're here, we get emails and texts and all the time. So feel free to shoot them our way, and we're here to help, even if it's just a second opinion. And it's just nice to know somebody in the business. Anything before I hit this next question we have in here, Christian, on the refi side? Because you're like our mortgage refi guru. So
yeah, nothing really too much to add to that, Addison. You made some great points. With the loan limits, we're not really seeing that really affect us too much, because we're refinancing people, from 2018 that were in the high fours. But as of right now, if you're at a 3.75, I would say rates are getting low enough to where it's making sense to maybe relook at that. And like you said, getting your escrow back, skipping a month's mortgage. You may not do a cash out refinance, but we could show you some advantages to still get a little bit of cash out through that transaction. There's little tricks of the trade, max 2,000 cash out on a no cash out refinance. So get with your lender, ask them about those little tricks of the trade, or just give us a shout out and we'll be glad to talk to you about that.
Yeah. Thanks for capping that there.
Yeah.
One question I wanted to bring to light here is, how do loan limits force sellers to think twice? And one thing to understand is, like, when you're selling a home, and it's very common out in our area, like, what you're selling for will dictate kind of the potential buyer pool for whom can afford to purchase the home from you. So I think home sellers don't think through what they're going to list at. So, for example, like, say you're at you're going to list your home for $499. You know that no matter what, even if it's $1 down, for example, that loan will still be under the 510 conventional cap. Other considerations is, is your house going to fit in for your county's FHA loan limit? Now, say you go at 550 grand, which rounding down the conforming loan limit's 510. You have instantly made your only buyer pool someone whom has $40,000 liquid or more in order to be able to purchase the home, because the max they can borrow, unless they go jumbo, is 510. So these are some considerations. Have you seen anything fall into your lap in those regards, and maybe some struggles? Because I've gotten a lot of calls, guys, about, like, hey, is this not a good time to list like a $700,000 home or a 625? How am I susceptible to the lending options out there? Casey, I'll let you kind of roll with that torch.
Yeah, I mean, I think that's a great point you're bringing up, because it looks at from the other side of this business. We're dealing with a lot of buyers constantly, but we're here for advice and education for everybody, for all our real estate agents out there listening to our show, when you have stuff like this, we're happy to try to give you guys our advice and figure stuff out. That's kind of what we're here for. I've just seen more of hesitation from sellers on wanting to jump in, because I've actually been hearing a lot of feedback from the multiple offers, but that's not at your jumbo price range. We're seeing that a lot more at your conventional max, that 500 price mark. So I personally haven't dealt with a lot of that with the sellers side, but maybe Christian's got some better stories than I do. But yeah, for most of that, I think for a seller that is reaching out and doing that is they're doing their due diligence. Sure. That's smart for someone before you list a house. Of course, I would want to know, am I setting myself up for more success or more of a headache? Because if I'm at that price point, there's different qualifications for people to buy those homes than there are for someone lower. One of the biggest things that stands out is that buyer needs to have not only the funds of down payment and stuff to purchase that 750 house, they need to have what's called reserves. And reserves are that full monthly payment set aside in accounts, sometimes needing to be liquid, sometimes they can be non-liquid, but that's additional assets that they need to have and show that they have to qualify for a jumbo loan. So as a seller putting my house on the market, at that price point, I'm focusing on a different clientele type to buy this home. They need to be a little more qualified than your regular buyer. They need to have a little bit more money than your regular buyer. So I think for them reaching out to a loan officer, it would be very smart to do, just to check in, see how maybe programs are going, the market's going for stuff like that before you list.
Mm-hmm. Yeah, no, I just think it's a big deal. I see price points affecting the buyer pool all the time, and I think a lot of it too goes back to where you're at. Right. On the West Coast, it's a totally different market. New York's another really high-priced market. Seattle, San Francisco to Portland, Oregon are three totally different dynamics. For us, we're seeing a lot of people sell their homes in San Francisco, in Seattle, and now that with the pandemic, they have full approval to work remotely. So they're retreating to a lower cost housing market. Mm-hmm. And then with that comes essentially the packing of a ton of equity. So in Silicon Valley, where you're peppering off maybe a $1.5 million home, just like nothing, and they're bringing up $750,000 in equity to the Portland market, it's a non-factor. So it kind of depends. You're not going to get that situation come across in areas that the average home is $200,000. Like that just it won't play a factor. But I think it's a good point. I think sellers really consider how you're marketing your house with your listing agent on price point, because say you're like, oh, I think my house is worth, $520, and you're like, well, maybe if I list at something a little bit lower, I will open up a whole new bucket of people on their search engines, capping out at maybe 500 or 510 because of the loan limits. So just a little bit of insight there. And
that's a great point, Addison.
Yeah. Well, thank you, Casey. I appreciate that.
Yeah, absolutely.
Well, I think that's all we got riding in for today. Once again, I just want to thank everyone for who's reached out to us with questions, and don't feel shy. We've gotten so many emails just like, hey, would you mind, giving me a second opinion on this refinance or this purchase? What do you think about this? And I absolutely enjoy it. I love it. And it's no benefit to us, or worsening. We just want to help people out, and it grows our network, and we want to learn and grow our network throughout the nation. So just a big shout out to a lot of different people who have been connecting with us. And till next time, guys, Friday, we're going to do another show. We got some great stuff going on. Want to remind everyone, subscribe to the podcast channel so you can digest some of our other episodes and content, whether it's Apple, Spotify, wherever you get your podcasts. And we did a fun little promo vid that got posted yesterday on Facebook and YouTube. I think it's hilarious. And
I still got to share that. I got to share that.
Dude, it involves Tiger Kings. It's freaking awesome.
It's the
But, check that out if you can.
Please
and
do.
we really appreciate it. So,
And all our industry peeps, feel free to shoot us questions and stuff too. Not just, home buyers out there, all our agents, anyone else in the business. You see what we're talking about, or you want questions answered, shoot it to us.
You want a topic? Let us know.
Want
We'll
a
dig in
topic?
deep.
bring it in. I'm going to bring in the poppy music for the out here. We got the sardines. This is the most amount of fun you've ever had talking about loans. I can't believe how corny this is.
But it's so right.
Oh my gosh, it's awesome. Once again, everyone, thanks for joining us live here on MLO, and we certainly appreciate it. My name is Addy Nat. This is the MLO team, Casey Carpenter and Christian Kemp. And until next time, guys. Peace.